In particular, not going so well today for commodities, of course, including gold and silver, with gold down $73, 2.6%. Silver down a buck 50 now at 4.64%. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on post-election day. As I'm sure you are well aware by now, Donald Trump has been elected president, and certainly the markets are moving quite a bit today on Wednesday afternoon, just before noon, 11:30 a.m. Eastern time. So we'll go through it quickly, a lot happening, but I will give you a nice, concise run through the highlights. First, here we have, this is on CNN, obviously tending towards the liberal side, yet on the front, Trump retakes power. And perhaps even more surprising than the victory is that it seems like we may be avoiding a lot of the haggling and dispute over who won following the election. Interesting note down here again on CNN. Harris expected to speak at 4 p.m. and will call Trump to concede. Now, is that to say that we won't see any legal action? I wouldn't go that far, but certainly the way it's shaping up seems like quite a difference between what many were expecting and certainly seemed possible. And in terms of how the markets are reacting to that, well, we do have some clear moves. In particular, not going so well today for commodities, of course, including gold and silver, with gold down $73, 2.6%. Silver down a buck 50 now at 4.64%. They had, well, let's go back to our silver chart. They dipped earlier this morning, had a little bit of a rebound, as you can see here, although near the lows of the day, which for gold is currently 26.75, and for silver down a buck 60 at 31.20. And again, you can see the futures got close to the $31 level, have rebounded a little bit since then. But as you may have seen here just a moment ago, stock markets certainly liking the news. And as you can see here, Dow Jones up 3%, S&P just about to cross 5,900, up 2%, NASDAQ up 2.27%. And where is a lot of that money coming from? Well, we'll get to the bond market in just a bit, but the other thing that happened, the dollar index up 1.6%, just about touching the 105 level. Obviously, you have Trump with what is viewed as protectionist policies, and certainly would be protectionist policies. And based on what we shared here a week or two ago, and I'll have a little sample of in just a moment, obviously, he went as far as to say that tariffs are his favorite word. He said it's the most beautiful word in the dictionary, or it might have been the American language, but something like that. He did not hold back, and you see the dollar responding to that quite sharply. Now, of note, we see gold and silver reaction like you might expect in terms of a dollar move like that. Bitcoin, not the same story. Again, Trump has also talked about a Bitcoin strategic fund. Either case, let us do the 7-day chart. And you can see here we were at 67,000 on Monday and up to 74,000. So, but back to the tariffs, let us play a little snippet here. And again, I think this is a great example of why ultimately these are going to be inflationary if he does indeed implement them. So let us play just a little bit here.
Come and see you. That was the question.
But we do it for small businesses too. We do it for small business. I'll give you another example. We have a man who I didn't know, but he came to me. He was at a meeting, and he built kitchen cabinets. And he was, pretty big in the business. That's all he did is build kitchen cabinets. He said, "Sir, China and South Korea are building kitchen cabinets for 1/3 of what I can make them." I said, "What's the quality?" "They're not as good, but they're good enough. I can't compete. I'm going out of business. I have 2,000 people that work for me. I'm going out of business." I put a 25% tariff still on kitchen cabinets. I saw the guy 3 days ago. He said, "I'm the man that saw you about kitchen cabinets. You saved my company when you did the tariff. and you save thousands of jobs, and my company is now doing very well. And he started to cry.
So certainly there is going to be an impact. Similarly, if they weaken the currency to export more goods, that will work. Obviously, the cost is generally inflation. You saw there, he mentioned that a foreign company was able to make it for a third less. Obviously, you can adjust for the level of quality, but if they're putting a tariff on that, that means that what people are the low price option in that example is the price is going to go up. So there is going to be an inflationary impact there, and we see that the markets are responding to that. Of course, interesting that you do see that move in the dollar at the same time, while our soon-to-be new vice president has also talked about the virtues of devaluation. And given the conditions with the U.S. Treasury and the interest expense, and really the portion of the math we're getting into there, I think there's some sort of dollar devaluation going to be necessary, whether Trump and J.D. Vance believe in it or not. Although, again, if you're wondering, a little confused by the gold and silver pricing today, well, fortunately, you don't really have to go back that far, maybe somewhat far, back to 2016, because we had a similar reaction there where I know a lot in the metals community, a lot of people were expecting a positive reaction in gold and silver following his election back then. And you actually had a surge there before they got clobbered pretty thoroughly, not entirely dissimilar from what has happened in the last 24 hours, although we didn't really get a surge yesterday or upon the news of his victory coming out. Although we, again, if you look back a couple months, we've certainly had a surge in the past couple of weeks. We've had a surge throughout the whole year. And I understand if you are invested in mining stocks or gold and silver and you see silver down $1.50 or gold down $72, that may not be what you were hoping for. Although I would just suggest that, gee, that's nice to have gold down $72 and still at $26.78. Here you've had a thorough clobbering of silver and it's still above that $31 mark, obviously above the $30 level as well, which had someone suggested that earlier this year, I think you would have been happy with that. So is interesting how it's very similar to what happened the last time around. Also keep in mind, what level did they go back down to? 1272, 1273. So here we are with a still $2,600 gold price. Either case, here is an article from our Gold and Silver Daily Substack. And as I mentioned here, I believe this one came out on Monday. Maybe it was Friday, but see, again, here is the bank swap dealer position and the banks not at the all-time largest short position that they hit a couple of weeks ago towards the end of the summer, but basically in record territory, slightly different, mildly different in silver, where here you see an extreme short position, not past the 2016 levels, although also not that far off. And again, to the degree that once that position gets quite large, that is traditionally when we see some of the more vicious sell-offs, of which we're seeing today. You would think there would be a fair amount of bank short covering. And since that is happening on Wednesday, this is not going to be included on the report that will come out on Friday. So we'll have to wait a week and a half to see how that comes out. But that's one of the things that obviously we talk about the channel, but mentioned quite a bit on the Substack as well. So link if you'd like to check that out in the description field below. And as I mentioned, the real stunner here is the 10-year bond yield up 16 basis points. Really a continuation of a move that began right around the Fed meeting back in September. Don't forget, we have Fed coming up tomorrow too. And there it was at 3.63%. Now we're at 445. So quite a large move in the bond market. And in terms of what the Fed may do in just a day now, credible that they were scheduled for the same week as the election. And here we see markets highly expecting a quarter point cut. And wow, if the Fed did something different than that, especially in this week, well, we probably have another volatile day in the metals. So, in terms of how the bond market is viewing all of this, there is the MOVE index, which does not update in real time, unfortunately. And this is as of yesterday. But basically, the founder of this says at the 150 level, that's when we're running into trouble in the bond market. You saw it cross that 150 level back when the banks failed in the first quarter of 2023. Let's go a little farther back. Obviously, you had some extreme moments in 2008. And here we are at 130, probably well, by the time this is updated, it's going to be a good bit higher, especially with the sell-off that we are seeing in the bond market. Why would people be concerned? Well, as you've heard, we talked about it on here before. Trump has talked about the idea of bringing Elon Musk in as a cost-cutting czar, which on one hand would be an extremely good thing. The only problem is that with the government, such a large portion of GDP, if you cut that out, that's going to create quite an economic impact. That's not going to help the deficits that are piling up either. Actually reminded me of something I saw recently, and this was about super microcomputer. And Lawrence McDonald mentions, if your third largest customer is committing accounting fraud, is that bullish? And he is talking about that in terms of super microcomputer being NVIDIA's third largest customer, obviously. So if NVIDIA has a lot of their revenue dependent upon one customer that runs into trouble, certainly a similar dynamic here where a big portion of that GDP is dependent upon the government. And that's why I mentioned before that Trump could alter the path of how this unfolds, certainly if some of these things are implemented. Obviously, there's also J.D. Vance mentioning that he's kind of come around to the Ron Paul argument on the Federal Reserve. Again, he has also talked about a devaluation. So if any of those thoughts are implemented in some fashion, then obviously that could have an impact. And not to mention that Trump's former pick, Judy Shelton, who was a former economic advisor, he recommended her previously to the Federal Reserve. And she has been talking a lot about doing government gold-backed bonds and has actually even questioned why we need the 2% mandate. Stable inflation is an oxymoron because it means it's not stable. And why not just go all the way, make it zero, make life much less complicated, which would certainly be good. Again, just to make sure that we are clear here, she is not officially on the team. And formal discussions of who will serve in a second Trump administration is a bit premature. So you can keep that in mind. Although in terms of what she's actually proposing, the new issuance of Treasury zero coupon securities offering lower interest rates than conventional treasuries, but with the distinguishing feature that they can be redeemed at maturity, either at face value or a pre-specified equivalent in gold. If she does become involved in Trump's team, it don't know how likely that is, but certainly a lot of things out there that could have quite an impact on the money and certainly the gold and silver markets. So again, that is where we stand today. Quite a impressive victory in its own right. Certainly, again, the fact that it seems to be decisive enough that we may avoid not knowing who is actually going to be the president. And anyway, with that said, just wanted to wrap up and thank Silver Viper, who kindly brought us today's show. Obviously, we have Steve Cope of Silver Viper on each month talking about conditions in the mining sector. And of course, the latest with Silver Viper, where the key hurdle is to get financing in place to go out and continue their drilling program. And to hear exactly where that stands, well, Steve Cope joined us on the show just a few weeks ago, and here's what he had to say.
Even before share price increases, we've been, we were working on looking at the potential of doing a joint venture on the project, and we're certainly still interested in that approach. And we've had, different groups from around the world approach us on looking at that, and they've been diving into our database and looking at things. We've also been approached at now, even in the last couple of weeks, there's been some attractive offers on a different way of going about things with the possibility of mergers. And then obviously if the share price increases, another option for us to look at would be financing it ourselves and continuing to explore and do it. So it's nice to have the options. We'll see what makes the most sense for our shareholders moving forward.
So thank you to Steve and Silver Viper. And another thing Steve talked about during that call was the latest in terms of the mining law updates in Mexico now that Claudia Sheinbaum has taken over. And to find out a little bit more about that, just click on the video that's coming your way now.